So today we're talking about breakouts. I just finished giving some feedback to one of my students about his breakout strategy. We worked together in that I taught him. He had an issue looking at the trades the right way and kind of identifying them properly. So I did a video for him. I also put this on YouTube also because it's a good kind of review of a strategy I like of breakouts with the RSI, and which you can of course learn for free with this. So I'll get through it. We'll get through the video and give you some feedback below, your thoughts, your questions in the comment section. I'll make sure it's useful for you and that you can actually benefit from this and learn. So let's get in right away, and you'll learn how to trade breakouts and get the same feedback I gave to my students a few minutes ago. So we'll dive right in. So here we are in a few months ago, April last year. Okay, we can clearly draw here a support, which is over here. I see how the touches are very obvious. Right? We touch the same place all the time, the same zone. And then I'm just going to go with the wicks here. So we have a wick, we have this one that's lower here, and this one here. Same place, roughly same place, then we come back here again. Okay. This is very obvious, right? This, you cannot really miss it if you look at the charts and you see the same low all the time. And then we have also resistance. In this case, we could look at both. Keep in mind if you have a break up, so break out to the upside, we need to kind of clear this wick here because this wick going beyond. Okay. Yeah, I could trade this here. Actually, just kind of have a look at this. We could trade this here if you want to, and we would need to have a breakout, then enter the trade. So I would just bring in the RSI. Breakout here. The RSI is just in the middle, so we're going to avoid that. Actually, we break out here. We could say, technically, we kind of break out here more, but then the RSI is still sort of in the limit. Okay, so that's not going to be a good place to look for a trade. Because we are on a daily chart, we don't have much room for profit here. The price is just kind of breaking out. You see the price is quite slow. We have a nice big wick here, so the price action isn't very strong. Then we have a bearish one here, which is stronger, and that's kind of where it starts to get oversold, but not yet. After it gets oversold here. But we're not going to here, it's just too late. Okay, we need to move. This is where the lower time frame comes in. Okay, so if you go on a forward chart and we kind of have a look at the same range, go back in time. Now, can you see the range is still there? Our same principle is still there. We can still see the highs and lows very clear. But now we kind of can have more room for trading here because we can enter very much earlier and we can sort of target a bigger reward to risk. So can you see the break of that range, right? Here we stay in the range. We need to break this low here. Now this one is the one that kind of breaks the low, right? This big bearish candlestick. Cool. And when you get to this candlestick, we're actually right oversold, right? You can see the RSI is oversold here at that time. So good place to look for a trade. So what I would do in that case, I would simply enter here below the low, a few pips below, just to make it more kind of reliable. Stop loss beyond the high. And then we can target, or let's just do 1-to-1. By the way, rule of thumb in a breakout is that we can target the height of the range for our next or our first target. You know, it doesn't always work out, but that would mean that basically like this, if I can just take this box here, put in the range. Okay, this box is our range. So we could target this on the other side, and that could be our target too, which is very big. Okay, now if you want to keep it to that, that's possible. Of course, it's a big target in that case. Be getting a, I don't know what's a very large target. Okay, we could be getting a actually 2.34 to 1. Let's do it like this. So first target 1-to-1, second target 3-to-1, or this whatever that range is. Okay, 2.34 to 1. Okay, now if you can see here, we have price breaking up, never coming back in the range because it's a strong breakout. We have the RSI in our favor. We have things there to add confluence. So price gets to 1-to-1 pretty quick. Actually, a few hours after. Okay, this is forward chart. So cool. 1-to-1 is here. Triggered. Boom. Okay, break even. Now, because this is a trend, stop loss can move to break even. Because we're trending now. We're not inside of the market. We're not going back and hitting the thing all the time. We're not going to hit the entry all the time. So we can just move this to break even. Okay, if you want to. Now we let the other trade run to this height of the range right over here, which was triggered also a couple of hours later. And this is actually a pretty textbook example because price actually goes back up after that. And kind of, we could have been also triggered here, so that's fine. We had a couple more options, but this is still a pretty good target. So 2.36 to 1. And the other one was a 1-to-1, so we get a pretty decent reward to risk on that. So that's kind of how it was done here. Now I'm just going to go to see on the 1 hour chart quickly. See if you had a trade also on this example on the 1 hour chart right here. Okay. Same principle. Can you see the range clearly on this chart? Yes, we have the highs. Right, touch here, touch here, touch here, again, and not too much here, but still, we're still saying within the range. Touch here, touch here, touch here again, and come back here. Cool, very nice. Now this is even sometimes better because we can have an even bigger target because of the size of the candlesticks here. So okay, I'm just going to keep this here. This is our entry on the forward chart that we had before. So let's kind of go here. Now, where do we see the break of the range? Well, we see the break of the range in that case a little bit before the forward chart. We see it kind of this candlestick here. So we could enter technically below the low here. Given that our RSI is oversold, I'm just going to make this bigger. And this candlestick here, RSI is not oversold yet, but on the next candlestick, it's oversold. So we're yes, it is oversold. Sorry. If you go see here, we are actually below 30, 27 or so. So it is oversold. Perfect entry then. So we would enter the trade the same way. Go right here, enter just a few pips below this candlestick, stop loss above the high. And then our target is 1-to-1, the first one. Okay. Triggered a few hours after. And see, we never come back here beyond the high because we are in a breakout. If the breakout works, we should not come back beyond this candlestick ever. Now we kind of have a wick here, a small push above, come back below. But that's kind of how it works here. Okay. 1-to-1. Then the other target, it will be the same thing. It will be, we take the height of the range, add it below. So here, same thing as before. And then we target this as our next target. Now, if you want to do just 2-to-1 always, that's fine. That's fair. If you want to kind of increase that. Now, this is a 4-to-1. That won't be done all the time. Okay, that's kind of an extreme example here. But it's if you can trigger that, then that could be a good home run in that case. So when we hit 1-to-1, I didn't see where that is. Somewhere around here, we could move a stop loss to break even. Or we can just kind of leave it to the original place. Whatever you prefer, it's fine. And then we get here at our 4.32 to 1. And even if we don't get triggered here for any reason, we come back here later. Right over here. So, pretty good trade. Okay. Even better reward to risk. Slightly more risky because you could get stepped out more often on the 1 hour chart than the forward chart. But it's still a good place to look for trades. Now, I want to kind of address quickly here why this works out so well. Let's imagine you were to trade this range here. Okay, you're someone who trades maybe lower time frame, maybe you trade on the 1 hour chart or so on. Let's go on the 1 hour chart, or the forward chart, sorry. Let's go back here. And okay, let's say you want to trade this range. Like you trade reversals. So you buy the bottom, sell the top, buy the bottom. That kind of example. So you buy here, okay, then you sell somewhere here. Then you buy here, then you sell here, then you might buy here, then you might sell here. Let's just keep it like this, okay? So if you were to buy here, where would you put your stop loss? Where would it make sense to put your stop loss? If you're wrong, you get out of the trade, then you just walk away from the trade, right? Well, you put your stop loss most likely here below, at least below this candlestick. Now, if you sell here, maybe you take profit, but where would you put your stop loss? Probably somewhere here, right? Just above the candlestick. And then again here, put your stop loss here. Then again here. Maybe you put your stop loss just above the high. And then you kind of go like this, right? Below low. So imagine all the people taking these trades. And then maybe some people are kind of getting out. Some people are getting in again, getting out, getting in again. Here's the same principle. You enter here. It's actually a nice bullish engulfing candle. Put your stop loss below. And then what happens when this starts to happen, right? Price goes down. People get nervous more and more and more. Some guys are going to move the stop loss below because they're afraid. Some guys will just leave the stop loss here as it is. But then when price starts to trigger this one, right? Stop loss triggered. Then stop loss triggered. Stop loss triggered. More stop loss triggered here again. People were really conservative. Maybe you have put a stop loss here just to be safe. Because we maybe had a high before. Or a low before. So the more we kind of continue here, the more stop loss are triggered. Then you've got these guys who want to get out of the break even. So they see price going here. Maybe they don't have a stop loss, but they entered the trade somewhere here before. So price pulls back, they get to break even, they get out, and then price just keeps moving more and more down from here. Okay, this is what happens with the typical breakout. So people put stop loss beyond the ranges. Same thing if you're to go here, then these stop loss will be triggered. This one will be triggered. These ones will be triggered here. So people will be starting to panic, and the market will just advance more and more and more in the right direction. So that's the case here. Same thing happened. We just need to make sure we have confidence with the RSI, that we have momentum in the market, and that we have actually a clear break of the zone, and that the zone is actually a clear zone. Let me know if that helps. Happy to give you feedback on that in the future. And I would love to see you find more setups like this in the market and kind of have a way to identify them. And let's see if we can give you some feedback on that also in the future. So appreciate your time here and appreciate the effort of the trade you sent me. Let's just make it a little bit better with those tips here. So let's talk soon. All right, so I hope you got some value out of it. Leaving your questions below, your thoughts, your comments. I want to hear. We just passed the 90,000 subscribers on YouTube here recently. So if you want to subscribe, that would be awesome, of course. We'd love to get you some value on a daily basis, help you out with your own trading, and see how you can achieve your goals this year. And I'll catch you back here in the next video pretty soon. Ciao.